Welcome to MarketStream and what's hot now. Take a look at all of the action happening on the U.S. markets. My name is Joseph Cusick with the Cusick Group. Securities are offered by MoneyBlock. Let's jump in. We are reaching, again, all-time highs on most of the major indices. You have the Dow Jones at 21,014.80, up 32. That's good for 0.16%. You have the S&P 500 getting above that 2,400 level at 2403.60, up $1.20. That's good for basically 0.05%. The NASDAQ up 9 points at 5713. That's taking a look at the NASDAQ 100. The Russell 2000 not biting at this juncture. And what's notable here, challenging that 20-day moving average. Watch this level on the Russell 2000. This level here, this 20-day moving average, 1389. We're at 1392. All right, so watch this. Vol, non-existent. 1030, down 10 cents. The dollar continues to weaken, down 53 cents at 98.35. That's not catalyzing the markets, but it is holding up the crude markets right now and the commodity markets in general. Also, one thing that's notable about some of the softs, specifically corn, wheat, looking at the corn crops, by the way, basically, nationally, you're seeing about 71% of the crop now in the ground, a little over 71, closer to 75%. Watch the weather forecasts and so forth for those of you that are interested in watching the commodity markets. Brent up 98 cents after we saw OPEC and Russia, specifically Saudi Arabia and Russia, in advance of the meeting on May 25th, basically telegraphed that they are going to extend the production cuts much beyond further than June of this year. That's what they agreed upon. Now we'll see if that actually comes to fruition at the May 25th meeting. With that being said, I always take this with a grain of salt. You're hearing a lot of pundits saying that the West Texas contract is now going to be looking at a range of between $50 and $70. I got to tell you, I haven't seen it above 53 in a long time. As a matter of fact, if you take a look at crude, and you want to actually put this in context, if I look at the monthly chart and I scroll back, I haven't seen $50 oil since basic or $60, $70 oil since 2014. Okay, let's put this in context. They're calling for pricing that we haven't seen in basically 2 to 3 years. So right now the range has basically been between 44 and 53. And with the on a monthly chart, with the crude contract now battling its 20-day moving average, got to get over $50 if you're going to see these bulls on a long-term basis get into this range, because the battleground is between these moving averages. So all these pundits are giving these ranges. Well, here's the battleground, the resistance points. I'm going to show them to you visually on crude. Right here, this is the 20-day moving average on a monthly chart. So basically, you're looking over the last, couple of years. Right now, $50 is that short-term 20-day moving average. Then you have 61. So basically, these are the resistance points. $50 and $60 is going to be the resistance points. The probability of that getting up there at this juncture is less than over 50. It's a 50-50, maybe a 45% probability. With basically getting above 60, you're talking about less than a 20% probability that's going to be above 60. There's going to have to be a major demand shift with just the amount of supply. Speaking of supply, the API data will be out this afternoon after the close. Watch that closely, because then we'll watch the EIA report tomorrow. Watch to see if there is a build or a draw. There was a pretty significant draw last week. Let's see if that continues for crude. Taking a look at the fixed income markets, interesting action. We see that the bonds are holding up. As a matter of fact, if you look at the 2-year, the 10-year, and the 30-year, they're all up in the green ever so slightly. You can see that they are, on a monthly chart, challenging their 20-day moving average. But right now, you're seeing that the prices are in that battle zone, folks. You remember how I talked about this 20 and 50-day moving average being a battle zone? This is a battle. If prices go up, you're going to see this go through the 20-day moving average. It's holding its 50-day right now. And this is looking at the 30-year. If you look at the 10-year, again, above that battle zone. So the 10-year is actually, from a price perspective, still in a bullish trend. That means that it's bearish on yield, bullish on price for bonds. Let's see if that continues. As a matter of fact, we saw the 10-year yield actually stick right at 2.34%. That's where we saw it close roughly last night. It's actually trading at 2.33. Watch 2.3%. That's going to be a critical level for bond yields to hold if the yield bulls are going to have any further upside. I do want to take a look at a sector that has been lagging because there was some earnings, and that's retail. XRT is actually down 40 cents, down 1% at 41.64. You clearly see that retail right now is in a bearish trend. XRT is the ETF that tracks retail. This is not a positive. This is one of the offensive sectors. The consumer is the driver in this economy. If we start to see that consumers are getting weak, and currently the bears are clearly in control in the retail sector, that is not going to be a positive. Watch the Russell 2000. Let's take a look at some stocks. One that we talked about yesterday in Tech Talk, Home Depot, announced earnings, had great earnings. We looked at that. The stock is up now almost 2% at 1.93%. That's up $3.03. If you go back and you go take a look at our Tech Talk last night, I talked about Home Depot. I looked at the options. They were pricing in a $3.47 move. The stock is up $3.13. Pretty good, huh? You didn't hear any pundit talking about that and giving you that kind of range analysis for the next 4 days. Well, we got it. We gave it to you. Go check out that tape. You can see it. Go to at Facebook, at MarketStream.live or at MarketStream on Facebook, or go to Facebook.com and you can go to MarketStream. You can mark my words. It's on tape. And it's not so much the fact that I gave a range and I was right. It was more about the efficiency of the option pricing. That's why I look at this stuff, because it helps me do it takes the emotion out of the trade. It allows me as an options trader to really focus on what's the right strategy, what's the right strike selection, and so forth. And we'll talk more about that coming up. Another couple names that had earnings that were less favorable was TJ Maxx. Maxx for the minimum. Well, they got minimized today. Down 3.26%. That's good for $2.50 to the downside at 74.39. Missed on their earnings, and they gave poor guidance going forward for 2017. You clearly see that the stock gapped down to the downside. You see it's down $2.66. The bears have clearly taken control over the last two sessions, and now on a short-term, intermediate-term, and long-term basis, TJ Maxx is in trouble. Looks like a bearish trend is forming in this discount clothing stock and goods stock. Finally, we take a look at a retailer, Dick's Sporting Goods, ticker symbol DKS, down 9.75%. That's good for $4.64 to the downside at $42.93. Again, went through its 20-day and its 50-day moving average last week, and then Monday broke down before earnings, and then this morning. We actually saw this grind here. This breakdown here was an indication that the bears had gained control. And you clearly see after earnings, even though earnings were in line, they had weak comparable store sales. So that took the stock down. There was some worry about that and concern. The charts confirm this now. The bears are in control in Dick's. We're going to watch those headlines very closely, see what goes on. But again, folks, this is why I'm looking at this. Not that it's any magic tool, but it gave me the perception that there's a grind here. The bulls have not really garnered much control, and then there was a break last week to the downside, and now today trading down at 42.88, right off of its lows, so better levels than the open, but under pressure. All right, folks, that is it right now. Oh, and again, like I said, join us at 1:30 Eastern Time. We are going to be in for Strategy Now. We talked about some great strategies yesterday. Again, check out our Facebook page. We have all the videos listed there. Go to Facebook and then at MarketStream, or just go to facebook.com/MarketStream. You can check out all the live videos that we have, and you can watch us live. So, with that being said, we will be back online at 1:30 Eastern Time for Strategy Now. So join us here at MarketStream.live. We'll see you then.